Hey, I'm Gene Goldman, and today is Monday, September 26th. Here's a look at the week ahead. Well, this week's topic has to be about market weakness. And let's talk about where we are right now. So U.S. equities have fallen for four straight sessions. The S&P 500 has had its fourth weekly decline of 3% or more in the past 5 weeks. And the S&P 500 is down about 22.5% this year. Why is it down? There's many reasons, but the biggest reason why the stock market is down is, first of all, the Fed is raising rates, which is tightening financial conditions, which increases the risk of a recession. Number two, bond yields are jumping, creating higher borrowing costs for, say, cars and homes. And number three, we have a very strong dollar. The stronger dollar makes our exports harder to sell, again, putting pressure on our economy. So there's a lot of very negative sentiment now for risky assets, but there are some positives that we can look at. Number one, inflation. Yes, we have high inflation, and this is causing the Fed to raise rates, but we are seeing many signs that it's starting to roll over. CPI was higher than expected, but all other inflation indicators, which are much more forward-looking, suggest otherwise. For example, in this chart here, prices paid indices for the purchasing manager indices are still elevated, but they're slowing very, very fast. So if inflation is slowing and the dollar is so strong, again, which hurts our exports, this could lead the Fed to raise rates less than expected. Number two, valuations. Valuations are better now than they were at the beginning of the year. Beginning of the year, the S&P 500 traded at 21 or 22 times earnings. Now they're trading at 15.7 times forward earnings, which is about the 20-year average. And number three, market sentiment. Market sentiment is pretty bad, but it can be considered a very contrarian indicator. As you see here, the American Association of Individual Investors Sentiment Indicator, which was created back in 1987, shows that last week's bearish sentiment was the fourth highest on record. So risk assets clearly remain under pressure, but we feel that risk assets are more likely closer to the bottom, and there are some potential positives. We are releasing our fourth quarter market outlook today, and you will see a big expansion in all of these topics. Why is the market weak? What the Fed is doing, the ramifications of Fed actions, and some potential optimism. Thanks for listening. For more information, please follow us on Twitter at SateraIM. See you next week, and thank you.